Okay. Even in death, IRS still expect punctuality. So you can't avoid tax, you can't avoid death. At least for now, the death we can't avoid, but maybe, hopefully, few years in the future, maybe human can invent some technology that can avoid or evade death. But I can't see in a foreseeable future that we can avoid tax completely. So yeah, unfortunately. And yeah, why are we talking about this? Because we're going to talk about descendants or estate return. So basically, this rule also applies when filing for someone who has passed away. Okay, we call that a descendants return, or if you're filing on behalf of an estate. So basically, yeah, even in death, this is really you have to stay punctual about filing for the tax. Okay, so yeah, and so basically, if you got like unfortunately, some of the relatives passed away, someone dies, you still need to file the final individual return. So that's the form 1040. Okay, so basically that form will cover, just like normal form 1040, cover the income earned before the death, okay, of that year. And of course, there is called estate return, right? So estate income tax return, that's a form 1041. So if that person have passed away, right, and then there is income earned after the death by the estate, okay. So basically, it's like some deceased person also own a rental property, right? So basically, that person passed away, but that rental property still generates income. Okay, basically that estate keeps collecting the rent for the future, like few months, right? That is estate income, and you're going to use the form 1041 to report the estate income tax return. Okay, and of course, that person will have some, for example, saving accounts, and that saving account will continue to generate interest even after that person passed away. So basically, that income isn't reported on this deceased person's final personal return. It's reported on the estate return. So basically, that's like a two return, one for just like form 1040, the final individual return. Okay, and that's cover the earned before the death, before the person passed away. All this will be reported in form 1040, but after that is estate income tax return. So it's a form 1041, so it covers income earned after the death, and since that person already passed away, that estate still generates income, and that estate need to file. Okay, so basically you can sort of think estate like a temporary company. Okay, that's created, magically created after someone dies. So basically, they need to wrap up their financial life. Okay, they collect the remaining income, pay off the debts, and then distribute what remains to their descendants. Okay, so yeah, that's the you can't avoid, at least for now, death, but you definitely won't be able to avoid tax. Even in death, tax still remain punctual. Yeah, that's something pretty deep, right?